The SPY saw a 2.5% range on Friday as traders bought the open just below the 581 level all the way through about noon on Friday up to a high just below 596 before the market continued selling off into the close. This volatility expansion is not surprising as we have entered into negative GEX territory, and we actually closed in negative GEX territory on the Tuesday close following some weakness earlier in Tuesday's trading session leading into the FOMC on Wednesday. So if you've been paying attention this week, we obviously had this huge dip in the markets on Wednesday following the FOMC announcement, and that continued on through until the open this past Friday. There were several reasons for the bounce that we saw on Friday, one of which was the negative GEX that was concentrated at the 580 strike. This is our lower dealer cluster zone. This actually coincided with just a natural support level that's been there going all the way back to the October timeframe. And so you can see this previously was resistance here multiple times. Then once we broke through here, this was the election time period back on November 5th. And following this breakout, we've come back and tagged this 585 level multiple times, and we dipped through that level at the lower end of this support zone just above the 580 strike on Friday. That was immediately bought by traders, as I mentioned, and here we are closing around the 591 level as of Friday's close. So if we scroll down here to our gamma exposure data graph, there's a couple of things I just want to highlight to you guys. The December 20th expiration is the monthly OPEX for December. We ended up negative 1.4 billion. A lot of that is going to be rolling off due to the big monthly options expiration. So about 800 million negative GEX is rolling off, and we can actually see that in our 3D surface model with negative 800 million GEX rolling off. So come Monday morning, we're going to have a little bit of a different picture, a little bit more of a clean slate for market participants to come back in and reposition. Another point that I'd like to make is that our GEX weighted volatility gauge is at 96.4. This essentially means that implied volatility was lower 96.4% of the time in the last 52 weeks. So clearly volatility expansion is taking place over the last 3 days in the market. We've flipped into negative gamma exposure territory. And another interesting point, which we actually brought up in our strategy session to our users in Discord, is that looking at our historical GEX chart, this actually tracks the closing gamma exposures at the end of the trading session every single trading day. And you can see predominantly most of the time we are in positive gamma exposure territory. However, for the last 4 trading sessions, we have been in negative gamma exposure territory. So that's a little bit of a concerning signal. We need to continue monitoring gamma exposure in real time throughout the trading session, particularly on Monday and Tuesday, to see if this is going to continue or to see if we get any kind of indication that a flip back into the positive gamma exposure territory is going to take place. So as a note, we do track gamma exposure in real time on our dashboard. This data updates real time on our charts every 30 seconds. So we've got GEX data and we've got intraday volume data on the options market updating every 30 seconds. So when we see these updating, we can tell when big shifts are happening. As I mentioned, a lot of the 0 DTE GEX here at the 590 strike is going to be rolling off. Most of this was in the December 20th expiration. Again, that was the big monthly expiration for December. Most of that was negative GEX, as I mentioned. And so we'll come in Monday morning, we'll see how the gamma exposure structure looks, and then we'll be able to make a better determination as to what direction the market is going to go. Are we going to come back here and test these lows that we saw Friday morning, or are we going to move higher back up into the 600 level or 6,000 on the S&P 500. Turning over here next to the Qs, we see a similar picture. Our dealer cluster zones are grouped very closely together. That's predominantly due to the monthly options expiration that we saw last Friday. So everything kind of, comes to a point in focus here in the options market. But of course, a lot of that is going to roll off. The options market will then open back up as market participants come back in and reposition. So a couple of key levels that we're watching for. One, of course, is Friday's low, as I mentioned before on the SPY. Same thing on the Qs. But on the Qs, we also see pretty large negative gamma exposure at the 505 strike. This is something that we're going to want to keep our eyes on to see if this is growing, if we continue seeing negative momentum and we can continue seeing volume coming in at this 505 strike, leading to larger open interest and leading to larger negative gamma exposure. This could be the next target on the downside if we see a break of this 510 level. On the upside, we've got the 525 strike, and really we've got a pretty wide dispersion of positive GEX between 525 all the way up to 540. So these are going to be some of the next levels we're going to watch. The first key, though, is getting above this 525 level here on the Qs. Once we're above that, things will likely start to open up and we'll likely start to see gamma effects from these higher strike prices really start to kick in. So for now, these are very small because we're pretty far away from these levels. But if we can get above this 525 strike, I think the gamma effects will really start picking up and positive momentum will start coming in, potentially bringing price higher, maybe back to all-time highs. So again, that remains to be seen. As of now, the GEX is very muted at these higher strikes. So we're really going to have to look and see what things look like coming in Monday morning. Turning next to Bitcoin. Bitcoin was not immune to the market sell-off. We got as high as the 108,000 strike. If you recall, we were targeting both the 105 level and the 110 level up here. Those were our next major targets. So we hit the 105 level pretty solidly, made a decent attempt to the 110, couldn't quite get there in time before the FOMC came out. And of course, Bitcoin straight down after FOMC as well. So here we are trading below 100,000, but we've still got positive gamma exposure at the 100,000 strike, and we've still got volume coming in at these higher strikes as well. So I think, this pullback is probably a healthy pullback for Bitcoin, coming right back into some major support levels here. If we can get any momentum coming in the market, this looks to be an interesting place for a decent risk reward entry for a potential bounce into higher strikes with stops just below the recent lows. Next, let's take a look at Palantir. Palantir closing above the 80 strike. If you've been watching our videos, we've been highlighting this large gamma exposure concentration at the 80 strike really for the past week and a half. It's been staring us in the face as we've been trading all the way down below 70 and basically all in this zone. That GEX at the 80 strike has been sitting there, and we finally got a rally up to that 80 strike on Friday. Huge move. We were actually trading this in our Geek portfolio, which we share in our community Discord. By the way, I'll put a link down in the description below if you guys want to check that out. So really happy to see that 80 strike tag. We had huge volume coming in as well, over 200,000 contracts at that 80 strike. This is our upper dealer cluster zone. If you recall, the last time we were at the 80 strike, that was at the beginning of December down here, we immediately rejected all the way back down to the low 70s. So this is a zone of caution. We do see some GEX growing at the 85 strike, still small. I wouldn't expect at this point that is going to be enough to overwhelm any dealer selling pressure that comes in above the 80 strike. In addition, we do have quite a bit of GEX at the 75 strike. So this could be a potential resistance zone. I'd be more careful and cautious getting in any longs above 80. This is most likely a take profit zone, in my opinion. Next, let's take a look at Meta. Meta really selling off as well with the rest of the market, coming back into a potential support zone. We see this 600 level was previous resistance. We rejected there a couple of times before finally breaking through at the beginning of December. We've come all the way back down into this zone, and this looks like a potential support, you can see we actually bounced there on that ending candle on Friday. The positive gamma exposure for Meta looks to be far outweighing the negative gamma exposure, at least from the structure in the options market. And so coming back into this support zone actually looks like a decent entry point for potential bounce, at least in the short term, off of this 600 to 590 zone that we're currently in. So again, we'll have to look and see how Meta's option structure looks coming in Monday morning after all this GEX rolls off from the December 20th expiration. Next, let's take a look at Tesla. Tesla trading just above the 420 level, classic number for Tesla, back into what's essentially a support zone that we've bounced off of many times over the last month. This is sitting just above the zero gamma exposure line. We've seen this zero GEX level moving between 400 and 420. So anywhere in here is a potential support zone or potential flip zone if we do see a breakdown. We've got our lower dealer cluster here sitting between the 370 and 380 level. So Tesla is a little bit of a tough one because we've got large gamma exposure concentrated at the 500 strike, but clearly Tesla could not get all the way up there. We had a combination of dealer selling pressure as well as the FOMC both hitting Tesla at the same time as it approached this 500. So of course, price rejected, just above the 480 level as we saw here. So it's going to be a pretty big task to get back up into these levels, but it's not out of the realm of possibilities. Even on Friday, we had over 100,000 contracts traded at this 500 strike. So clearly there are still market participants interested at the 500 strike. So that's going to be definitely something to pay attention to on Tesla. And guys, if you're interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. We've got a holiday special going on right now. You can get $300 off our yearly portfolio manager tier subscription. Use code HOLIDAYS at checkout. There's only a few spots left, so you definitely want to take advantage of that if you get a chance. Also, as a side note, we just added coverage for over 500 stocks and ETFs on top of our already existing coverage, covering all stocks with weekly options expirations, a ton of data that you can sort through. We even have a screener that will allow you to perform a number of different searches as well. So definitely check that out when you get a chance. Members also get access to our premium channels in our Discord community. I'll put a link down in the description below for that as well. You can check it out for free, so be sure to come on in and say hi when you get a chance. Thanks so much everybody for watching, and we'll see you guys in the next video.